Hello everyone, this is Greg here, and today let's talk about SPY. There's a lot of unusual hedging activity happening here. So yeah, let's begin. So as usual, let's look at the chart first. In the last few days, we have quite a big rise here, dropping a little bit today. Implied volatility is quite normal, and VIX is also quite normal. But let's talk about this huge hedging activity happening in the options market. Now, before we look into the detailed positions in the options chain, let's talk about the big picture here, why there are potential hedging activity happening around this time of the year. There's a few possibilities. First of all, the big one, we're coming very close to September, and as some of you are aware, September is historically bearish. Now, if you look at the chart over here, the market has historically not been doing so well in September, and that's not just in the States. It's the same in other markets. As you can see here, September just historically has not been doing so well. And typically, when we are coming close to this time, when we're coming close to September, a lot of firms, institutions, and retail traders will start hedging early. In August, mid-August, early September, or mid-September. And that is one of the reasons why we might be seeing more hedging activity at this time of the year. Now, another reason is, of course, the concern with the AI sector. Everybody has been talking about this AI crash for quite some time now. That could be another reason why we're seeing more hedging activity. And the last one is something quite unique, the Japanese yen. Let's talk about that really quick. Now, as some of you might know, the Japanese yen has been dropping for the last few years. In fact, recently it is at its lowest. It did have a bit of a rise right here. And the main concern is, recently the Japanese government and central bank has been doing something quite aggressive to support the yen. They have used some $60 billion to support the yen. Not only that, for the first time in the last few decades, the Japanese government is finally raising interest rate. And that could mean a number of different things for us. Whether you're in the US or Japan or another country, that could really disturb the markets. It could affect the bond market. It could disrupt or destroy carry trades. And that's a big deal. We can go over the details in another video sometime, but the key point is this. Historically speaking, rising yen is not good for the US market or the global market. Rising yen typically means markets hurting. So yeah, with all the activities happening, there is a concern, a risk that there will be a sharp rise in yen, like we're seeing here. Despite all the short sellers, that is a very, very real risk. So that could be another reason why we're seeing increased hedging activity in SPY. So let's look at that. So let's look at the positions here that our algorithm has picked out. Let's start with this position right here. Okay, this is a bearish position. Now, I do want to clarify that I said that we're seeing more unusual hedging position, but that doesn't mean that that the market is bearish. The market may very well be bullish. We never know for sure. Just want to clarify that hedging doesn't always mean bearish. Okay, let's continue. So this one is just looking at the position itself, it's bearish, huge position. Trader here is betting that the price will not move above 800 or passing 825. And this is about a month and a half away. So we got quite a lot of time remaining here. So essentially, yeah, the trader is betting that the price will not go above 800 within about 43 days. Okay, this one is similar, also bearish, also betting that the price will not go above 790. This one as well. Now, just a reminder that these are not all of the positions, strategies available in the market. These are only the bigger, more unique, interesting positions that our algorithm has picked out. But yeah, so far we're seeing quite a few bearish positions. Okay, that's a huge bullish position. So yeah, we're seeing mixed signals here. Let's continue. Okay, I think we've gone through that one. Yep, this one is also a huge bullish position right at the money. Now, if you're not very familiar with the position here, these positions above here, although technically they're bearish, but it doesn't mean that the trader or institution believes that the stock will not be rising. In other words, the stock could be rising and the positions here might still make money. So as long as the price does not go above the short leg here, these strategies will be making money. So yeah, technically they're bearish. They just think that the price will not go above the short leg within a month and a half. So if you're thinking that, if you're not sure and you're thinking that the stock might be slightly bearish, that it won't be rising too much within a month and a half, this could be a good position to have. Okay, let's continue. This one, yep, we have gone over this one. Let's continue. Yep, wow, that's a huge position, bearish position. And this one is likely a hedge. Look at the size of this position. So most likely what's happening is this trader has a huge long position in SPY, and they're placing a huge put spread position to hedge against that position. And keep in mind that a lot of the options activities is actually happening in SPX and the futures market, not just SPY. SPY, you can see a mixture of institutional traders and retail traders, but when we talk about institutions, it's not only in SPY but also in SPX. And we're also seeing a lot of hedging activity happening in SPX as well, and the futures market. But in this video, we'll mainly be showing the positions in SPY. Okay, so this one is also bearish, likely a hedge position. And as we go further down the options chain here, some of these positions are mainly hedging against a crash event because they're further out the money. There's less premiums paid for these positions. And hopefully soon I'll be able to show you the net premium paid on these positions. That should be interesting to see. But right now I need to get permission for that, so I can only show you the contract size. But even with that, it tells us a story on what's happening in the market, what some of these bigger players are doing. Yep, we reviewed this one. Yeah, so quite bearish. Certainly more bearish positions than usual, most likely hedging positions. And again, it doesn't necessarily mean that the market is bearish. It just means that some of the bigger institutions are being cautious. So let's continue with the singles position. Okay, that's a huge bullish position right here. That one is bearish. This one is likely a covered call. Since we're talking about SPY here, most institutions will have a huge, especially like the bigger pension funds, hedge funds, mutual funds, you name it. Everybody is going to have some everybody's going to have SPY on their portfolio, no doubt about it. That's the same for retail traders. So covered call like this one and that one will make a lot of sense. Collect some premium while holding the long position. Now, if you do plan on making similar trade like these positions right here, you have to be very careful with these positions. You have to be monitoring them on a daily basis, weekly basis, or with a bot, because if the stock does rise suddenly, you could be losing a lot of money, or these positions will be capping the profit that you can potentially make from your long positions. So just be careful with that. Unless you're planning on selling your long positions at this strike point. Anyways, be careful. And that goes the same with every strategy you use out there. Just be careful, especially during this time of the year. Actually, this one right here just might be a bearish position. Maybe not a hedging position. Maybe from a retail trader. Let's see. This one is bullish. This one is bearish. Possibly a hedge. This one as well. So as we go further away from the spot price, these positions will be increasingly likely to be hedges. Actually, this one is bullish, or rather, the trader here is betting that the price will not go below 680 within a month and a half, or this just might be a price point where they feel comfortable entering the market. Interesting position. This one is definitely bearish, very likely a hedge. This one as well. Okay, similar to this position, it's bullish, betting that the price will not drop below 730. Bearish, likely a hedge. Okay, that's all the positions I want to share with you today. Mainly just spreads and singles today, and certainly a lot of interesting activity, hedging activity in the market here. Unusual, but not too unusual for this time of the year. Just and again, that doesn't mean that that it's bearish, that the market is bearish. We do see bullish positions here as well. It just tells us that there is more caution, very common for this time of the year, and also with some unique events, international events happening in the market. So yeah, thank you for watching. As always, if you have any feedbacks, or if there are contents that you want to see more in the future videos, please leave it in the comment section. But thank you. Have a good day.